Morning traders, welcome to the Traders Lab. I'm your host Tom B. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Thanks, Marty. How we doing in YouTube this morning? Welcome to the Trader Lab. Appreciate you guys stopping by. This stream's about integrating bookmap order flow tools with auction market theory using a volume profile as a chassis for structured trades in the intraday developing time frame. This is the business of trading. If you're interested in the business, how the markets work, why they do what they do, how at times to get aligned with it, with structured trades, which means you anticipate the trade, you stalk the trade, you don't make it up as you go, you know what you're going to do. What we don't know ever is what the market is going to do. That is 100% random 100% of the time. And it's important that you understand randomness and that this is a statistically based business or a probabilistic business, not a predictive one. It's very different. Human nature is one to want certainty and prediction, to be right. All those things, all the wonderful reinforcement we had through a lifetime, we bring it here because that's what we are accustomed to. Success, measuring success, getting approval, right? So we look to get the same things from here in this environment, but this environment's not here to approve you or to let you know how smart you are or any of that, stroke your ego or create your self-worth. It has nothing to do with that. This is really a business where you show up and you take risk to extract an edge. That's really all it is. So anytime you're putting a trade on, hopefully it's only at a location and in a condition that favors an outcome that favors you versus the randomness. And in spite of the randomness, you're going to take stops because every business has overhead and cost of production. And for some strange reason, and ask yourself this, why is it that we don't want to take stops? Now, it seems like the answer is obvious, but how can you extract an edge and make a profit, assuming you can execute in a disciplined manner when you actually have an edge, if you don't execute it? So to get the profit potential, you have to pay because of that random distribution. So instead of looking at this as life or death, which is psychologically how you experience it, one isolated iteration in a random environment is not life or death. What you're doing in this business, contrary to how you feel about it and your primal wiring, is just sampling the market to extract the edge. And that's how casinos operate. So we always need to come back to what the business is. Not what you want it to be, not what you want to make it. And that's why Trader Lab exists, to help you differentiate between fantasy and reality, the influencers, and the only one thing you need, and all the nonsense and noise that's out there. Because to create sustainability in this business, you really have to understand what other traders do, retail traders, and you also understand that if you do what they do, the failure rate being over 90%, as it is said, for those traders, if you do what they do, it might not be realistic to anticipate a different outcome. So if we know what they do, maybe we can use what they do and take what is a potential liability for us and make it an asset. What do you think about that idea? Let's go from here. Now, I'm going to take you into a couple little things. First of all, reminder, Blue Jacket contest is going on. It's going to be over soon, ends the month of February. You can get the coveted Blue Jacket, and I do like this. It's really nice when someone says, "What's that?" What is that? Or somebody who, a lot of people now are interested in trading, and they see this and they go, "Wow, what?" So I get to tell them about Bookmap. And needless to say, I'm pretty passionate about Bookmap. But here's the thing. Besides a coveted Blue Jacket, you can win 3 months of Global Plus with data, either stocks or futures. And all you have to do is annotate your trades that you've taken in Bookmap. It could be on replay. It could be sim. It could be your actual trades, screenshots with annotations. Send them in, and you could win the coveted Blue Jacket and 3 months of Global Plus and data. Now, let's jump right to the market. I'm going to give you what I always do, higher time frame. Why? Because we trade inside it as day traders. Now, this is yesterday. Now, remember how the market tends to work in all time frames. Now, take this idea and just extend it or extrapolate it to different time frames. And the market is a rotational beast, you might say. It rotates over itself. And the reason it does that is because when you have sellers in here, there's buy stops, right? If we get continuation selling down here, as an example, what's in here? Buy stops. If I come down here and take out this low, what do I get? Sellers, buy stops. What happens if I come across the range? I squeeze. What's above here? Buy stops. Buy stops, and then the shorts in here get squeezed. Now what do? We come up here to a target there. If it's too high, what do we have? Longs. What happens to them? Thanks for playing. They get a coupon to the buffet. We go down. So now we're taking the longs out. Now we take this low out by just a little bit, get more sellers, right? And then come across the range and do what? Squeeze the sellers, squeeze the shorts in here, squeeze the shorts in here, and come up. Now we got the stops out here. Now what happens to these guys? Open down here. What do? Take out the longs. Thanks for playing. Shorts are trapped, right? And I don't remember exactly how this went. I think it went, it went up first, didn't take this high out. This set up shorts for us, and the targets were coming down here to take the longs out. Then what happens? We get our shorts. The market is short. Yesterday, what do? In the morning, we get our continuation sellers, take the stops out, see if this doesn't look familiar, trap the late sellers, and they turn into what? Buyers, short covering. What about these shorts? Hasta la vista, thanks for playing. They get a coupon to the buffet. What about here? And what's up above here? Buy stops. Do you see a theme? Sell stops, trap. Sell stops, trap. What about the shorts? Buy stops, trap. And then where's our next potential target? 45. Neither here nor there. Who knows? And possibly higher, but let's work with the 45, okay? Is everybody tracking so far? This is before the market opens. You might want to be thinking about that, right? What do you think? Is everybody with me so far? If you're in YouTube, hope you guys are getting something out of this. I'm losing the chats here. Hold on, guys. I got to try to get these back. It's the only thing I have a problem with here, among other things. Okay. So how we doing in YouTube this morning? Is everybody doing okay? Appreciate you guys visiting Trader Lab. Now let's go to Bookmap. Let's see how this all might fit together. And again, remember what the Trader Lab is about. This is not a be right, predict. Wouldn't you like that? Sure, we all would. Guess what? Wrong business. So since we can't be right in this business, in the sense of knowing what's going to happen, how can you measure yourself? I mean, how do you know if you're doing, quote, the right thing? Here's the right thing, in my opinion, and this is not all inclusive. The right thing is you have to know where your trades might show up, and you have to wait for your trade. This is not a video game where it's adrenaline and dopamine and impulse. There's a fight or flight mechanism that is triggered when you sit down to trade, because we're wired to be fearful of pain, which is losses, and we're wired for certainty and not taking risks. So all of that, right? So when you sit down to trade, you're in a heightened state of fight and flight right away. So how do we deal with the emotions that we bring, as if you want to say, to the table? Think casino, right? Table. So if we're predisposed to behaviors that do not align with the business, we have to anticipate them. We have to manage them. It should not be a shock to you that you might impulse into a trade, because how many times have you done it already? Well, do you think that will change unless you change what you do when you have that impulse? The first step is to know yourself and anticipate you will have the impulse, because it's wiring. So it's not a question whether you're going to be subject to the chemical. It is when you experience it, you recognize it, and you put it aside. That's all. You go, yeah, okay, I'm feeling FOMO. That's what I say to myself. This thing runs away if I'm not in it. I'm feeling FOMO. All right, what do I have to do? I already know. I got to wait for my next trade. You know, if I miss a trade, I can't respond. I have to go, okay, was that an error? Did it just move too fast and it didn't fit risk reward? What was it? Oh, I didn't take the trade even though it went up 20 points. It didn't fit my risk parameter. That's success. One trade is insignificant. It is all of them. And the only way you can stay in this business, from what I've observed, is just being not completely detached, but interested, curious, not predictive, and just wait. Because as a day trader, there's going to be many opportunities for us. If you have structured trades that you vetted, in Trader Lab, this is what I share, so you can participate in the market. But each trade is unique in the sense it's random, and you have to be in alignment to have the best opportunity with the current condition of the market. And that's why I always say developing traders should trade in alignment with the dominant side. If we know right now the shorts are trapped, which they are, and we're going for the stops, which were over those highs I showed you at the top of the stream, and I'm opening in a gap, and I'm out of range, out of value. What is this? This is a big deal. The market is short. The fuel is here. The overnight volume point of control is the retail price from the last auction, which is the ETH. This is yesterday's high. What am I doing outside of yesterday's high? This is yesterday's retail price, highest volume. Too low. Remember how this works. Too low. Buy stops. What's next? Last auction. What's this? The new retail price. So I'm outside of here. I'm outside of this. We might fill the gap. I don't know. What do you know? 45 is my target primarily. And then I have this single up here, which is a low volume area that we ripped when we went down, that we fell away from. I have over 90% probability to take this out. Past performance not indicative of future results, of course, and this. So for me, it's longs only, and I even know that if I get taken out of my longs that I already have, that I have a structured trade called the IBF, which is a reversion trade long. And I also know if I come down, depending where, I can still get long. I don't have any shorts. Wouldn't think about it, not interested. And here's why. Early on in my career, and it's going on 47 years, so I've done everything you've done, unfortunately longer. And I mean being stuck in Trader Groundhog Day with the defective process and random winners. That's where you guys get trapped. You always are going to have winning trades. If you had a random buy-sell generator on your desk and you just pushed the red button and you didn't know whether it would buy or sell, you'd still have winning trades. What does that tell you about the process you have? Here's the problem. We all have winning trades. If you closed your eyes and you didn't even know what you were doing, you'd still have a winning trade. There's what I call Trader Groundhog Day, because you're going to take that randomness and those random winning trades, and the logic says, let's make it better. That's all. So, and you'll spend years with randomness, with random inputs, which just gives you more randomness. You don't solve the problem with that. So, but you can spend years searching for the mix, the magic mix, or search for the holy grail that everybody else has walked in your shoes and never found. You have to stop and think. Why are you getting the results you get? And if you're not sustainable and you're not profitable, there's a reason. So come to Trader Lab if you don't understand the reason. It doesn't mean you'll become a successful trader, but you'll understand maybe why you're not. And then it's up to you to correct it if you relate to what I share and other traders in Trader Lab. Now, let's look. What are we doing here? Well, let's get back to the ETH open. Here's a couple things I know. Now, this is the ETH. I have my ETH high over here. I have a sweep here. This is resistance right here. So I'm going to just throw a little block around this, because there is behavior here. That's the only reason it's material to me. Otherwise, who knows? Right? Do you know? I don't know. You know what I figured out? Don't put your energy into knowing, because you can't know. Put your energy into behavior and understanding rotational behavior. Now, when I talk about stops in different time frames, As we think of time, RTH is a time frame. However, in the intraday developing time frame, I don't use time. And the reason I don't use it is I don't want to be hampered by time. I want to see the behavior and change. It's not on the clock, it's on the participant behavior. So it's something that because previously, just like everybody else, it was time. In fact, all we had when I started in 1980 was time. That was it, you know. And it was a big deal when you could actually see a tick chart because we didn't have any of this. So anyway, this is a sweep. This is liquidity. This is an obstacle. This becomes support. This says potential counter rotation. This is a short trigger in the trader lab. Now, let me explain this thing of short trigger. It's not a short. It's a trade management opportunity if you think the trend might be up. Or let's just say you're long in the ETH. This is support. There's a sweep. The sweep is telling me here that I got to be, conscious. And I also know 45 is my target. It's already on the higher time frame at the top of the stream if you missed it. So this is a trade management opportunity. So for me, I'm not taking any shorts unless I'm trading counter trend, which is an option. But I always say for traders, if you're not profitable trading in alignment, then this is your ticket out of the business. My opinion only. Only from what I've observed, working with a lot of traders, training traders over the years. It's really more of a gambling thing to be fading and a dopamine fix. The idea of trading, in my opinion, and it's just a personal opinion, is to align with the the primary side. So let's take a look. RTH open is 8:30 Central Time. Now, watch very carefully. Let's pay attention now. So this is the RTH open. This is called the overnight volume point of control. This is our new retail price. In the microstructure, this is too high up here. The ETH high, and there's statistics for this, so we're opening higher outside of range. Let me give you the first ones here. First hour's high or low has a 98% probability. There is approximately a 29% probability-ish. We take out the first hour's high and low. So that's a possibility because of the gap. Getting to the overnight volume point of control, approximately an 81% probability. Taking out the ETH high on its own is 79% probability. Getting to the previous high or low, a 67% probability. That's the gap fill, okay? Taking out the first hour's high, 62% probability. So we're leaning to the north side, okay? And it doesn't mean we won't go down or it doesn't mean anything. It's just whatever it is, it is. So open. So now there's a trade here. Now this trade is somewhat aggressive, but let's look at the concept that I've shared in TraderLab. Here's what I know. I know I got buyers there. You can see the buyers. So let's look at a couple of things here. And there's my liquidity, there's my absorption. Now I don't know. What I'm saying is what I know is what I can look at. I don't know what the market will do. So I can mark these layers out. So I have this marked out and I have this marked out. That's all I know. I know what might happen. I don't know anything else. So this is the current retail price. So at RTH open, which hasn't happened yet, let's look. It's here. Now I'm going to show you the opening trade. Now I consider these aggressive, but I got a gap. And why is it important? Because I have buy stops here. I have over 98% probability of this, and I'm going long. And here's the other part that's important. If I get stopped out, I'm going to get long again. I already know that. I'm not concerned about getting stopped out. If I was concerned about getting stopped out, I would not be a trader. So I have to get over it. What is a stop? It's the price of discovery. You're basically placing a bet with an edge. So I'll place bets all day as long as I have a statistical edge, because I'm counting on that edge to pay me. It's just random as far as which trade might, and none, and or maybe none of them. Now I'm going to take you into microstructure, which I like to do all the time. Let's look. And if you have questions, post them. I'll do my best. And please give a like if you're visiting in YouTube. Hold on. I do not make videos on gold. I'm getting a question, but the process I share has nothing to do with the product, in the sense of I should say the process is how the market works across all markets, period. This is market mechanics. It doesn't matter if it's gold or anything else. What matters is your process needs to be adjusted to the condition of the product you trade. For example, if you trade NQ, it's the same, except NQ is thinner, so it's going to skid you on stops. So you have to adjust, to volatility. Gold is a thin market. It's also a manipulated market by the dealers. You just have to understand gold. And and when it rips, it's, stops are a suggestion, right? The auction is the same. But the trade management and understanding the mechanics and the depth of the market, all of those are the things. Kiloton, I'm glad to see that you might be off those shorts. Anyway, I hope that answers your question. Let's come back here to the open. So what do we know? This is the retail price. This is the RTH open. There's fuel here. I'm in a gap. High probability to go here. And then 45 is my next area where it's important. Let's watch. So first trades. Now I consider this very aggressive. It's just the way it is. So, and what else do I know? I'll take a stop if this thing comes back. What else do I know? I'll put the trade back on again after I get stopped out. Why? Because it's random. What do I know? If this is too low, overnight volume point of control, this is my target. So I'm trying to go here, and let's see the trade. Here's the trades. So this right here, and these are very aggressive trades. Let me try to show it to you. And if it's not qualified for you, it's no big deal. You just wait for your bus. Anybody who's been trading a while, who is sustainable, disassociates themselves from FOMO. They feel it. I do. I feel it. If I'm not in the trade like this and it goes up 20 points, the lunatic is going to be yelling in my ear. That's Hyde. But Hyde, I know Hyde's going to show up because that's Hyde's job. And Hyde doesn't know that I'm not going to starve for the winter. So it is behaving to food or sustainability, survivability, running away. So if we were out on the savannah, back in the Stone Age, and we were hunting for dinner to bring back to the cave, and it ran away, I'd want to chase it, right? Think about how your dog behaves to a squirrel, or in New York, pigeons with oil slicks around their necks. It chases them. It's a primal wiring. Same thing. It's a hunting trigger. We have similar things. Okay, is that making sense? So this is too low. Let's look now. So no clue. So this is retail. Break high. This is support right here. Now this is happening, immediately. I cannot respond to this quickly. Now when I break high, I now know this might be too low, opening swing low, and I can definitely get thrown under the bus. My stop, I'm just going to show you. I'm not recommending this to anybody. It's just what I do. It's going to be under this liquidity, not here. It's got to be below here and under here. That's my thing. I'm not saying it's your thing. If you want to put your stop there, that's your business. What can happen here? A couple of things. Longs from yesterday, with this gap, we can get something called responsive selling. In other words, oh, wonderful, I'm taking a profit. And you get the down rotation. So you get breakout traders in the gap, and then you get what's called responders. Let's get out of here, take some dough, get out of Dodge. So if I get long here, I know I can easily get picked. And then if I test this, it might be too low. I can buy this, and either way, I can buy this. I can, if I take the stops under here, see, I can get long here, stop under here. I can get long here, stop under here. They're the same. Okay? Is everybody tracking? That's the long. Now, long. Now, I have a little resistance here, and I have this. Let's just see what it does. VPOC migration. Where's my support? It's here. Variable high volume node. Doesn't get there. Break high. Here's what I can do with this, subject to my plan. This is absorption. Now, for me, support is here. Variable high volume node. Why is it support? This is the retail price. Think shopping. If the market moves higher in the retail price or higher volume, and it's not hard to do this, there's no volume, we're only in here like 10 seconds, and I rotate and I come up above here. Here's the language. Let's look at language. This is foreign language. Too low? Maybe. Maybe. On sale. Can't buy it here. What about this one? Too low. Break high. New retail price. Counter rotate. Too high. Where's too low? There. There. Okay? If I can't get long there, I break high. This is a structured trade for continuation. It's very aggressive. Your stop still got to be outside. If you don't have enough range, you could put it under here because the buyers are here and the buyers are there. This you have to vet, and it's very easy to get taken out. Not that you can't avoid it. I'm just telling you, it's part of the thrill. This is your target. And then 45 was the next target. Let's look. This was some resistance. You see there's a reaction there. Now we're also going to look at order flow and integrate it into this. Let's look. VPOC migration. So what do I know? Let's follow the yellow brick road. Now we're going to be in multiple time frames here, as you guys think of them. Now, and we don't need to debate what's a time frame and what isn't. Does Tom use time? Yeah, he does. I see some posts about what I do and what I don't do, and it's kind of misinformed sometimes or myopic. Everything is in the stew. It's just where, in which vehicle, what am I trading? If I'm using order flow, I'm not using time. If I'm using other structure, I am using time. But volume for me is the primary input, because volume is the way that prices are not equal. That's the thing about this. There's only 5 contracts up here. Is that the same as where there was 700? No. What does it say? Maybe that's too high. Well, if it's too high and this is the retail price, then the possibility is to come outside and rotate back, come outside, rotate back, come down here and rotate back. That's what I know. That's all I can know. So I don't know anything more than that. But once I'm in this, the possibilities are, let's look at the possibilities. If this is too low, I extend. If this is too low, I extend. That's what I know. If I break under here, then here's the possibilities. Mean reversion. So outside, back here, that's one possibility. Continue, because the trend is up. We have a gap. Or I come down, and I now come down here because there's going to be stops sitting at VWAP and mid, and my buyers are here. So I can look for longs and a stop under here. That's just possible. And what happens here? Too low, VPOC migration. Who knew? See, I don't know. So what I do is I take my trades, and I sit here like everybody else and go, what's going to happen? Since I can't answer that, I just manage the trade because I'm in an environment of randomness. I know that there's liquidity here, and I have 45, and this is a previous location that's important, and I have another one I think up here someplace. This and this. So I have these as other targets, and there's the current high of date. So anyway, let's see how it works. Notice the liquidity. So if we're using a high tier order flow tool like Bookmap, we already know this is where we can create edge. What I know is north by northwest, and as long as I'm going up and I'm consuming liquidity, so you see the aggressors, and now I have resting liquidity over here. It's higher, and that's why it's darker than other liquidity. Now it's strong down there, and it's up here, and then I got more up here. Okay, you'll notice I have liquidity sitting here. That's another reason it's a target and it's a high volume area. Remember how the market tends to work. It tends to check high volume in all time frames. So when I was starting to talk about time frame and the nature of market mechanics, and I did my webinar or stream yesterday, and you guys ought to review it if you haven't seen it, is about market mechanics. In all time frames, as you think of them, or rotations is another way to think of them, the market goes up to go down, it goes down to go up, it goes up to go down. Why does it do this? Because if the inventory gets lopsided, and of course it doesn't have to do anything, don't forget that. If the inventory gets lopsided, it's going to counter rotate. The other reason it counter rotates is what's going on in here. Retail traders, risk adverse, which I'm not, where they're trailing their stops. Where are the stops? Let's look a little closer. Let's look. What is this? Is this a strong low? What are the retail traders doing in here? Stops, weak, absorption, support, stops, break high, resistance, support, right there, back to resistance, break high, go into the moon, watch. Now, how might you use this? Now you have to vet these. Everybody does their own thing. This is the thing about TraderLab. It's not right, wrong. It's edge. If you can't measure it and you're making it up, you're on your way out of business. Do I sound insensitive? No. I've just seen it too many times, and I see too many developing traders that don't have the self-control to put in the work. That's really what it is. Break low. What is this? Sellers are here, sellers are there, and if we hold this, we can go to the next target. If I break below, this is a trigger. Now, what do you do with this? Well, in my opinion, if the trend is up, I'm not taking any shorts. That's maybe one of the shortest, quickest ways to put yourself out of business. What I'm doing is managing my trade. So right here is my over-under. This is my trigger. The sellers take control right there. This is resistance. So absorption, which I don't know till hindsight, so let's get over it. You'll see the break. So let's look at what we know. Stops are here. Stops are there. Stops are here. This is weak. Buyers are here. I'm going to have stops under there. Sellers are here. Break high, support. Sellers take control, resistance. Now I'm going to take you to microstructure. Just showing you some ideas. These are not trades. This is market mechanics. When this happens, where I'm at, as soon as this happens, is I look at support. Here's the next piece. I'm going to take you down into time frames as you think of it. Remember, no clock. The auction is, for me, the truth of the market. It's not some candle, bar, or indicator. It is participant based. That's all that's going on here. This is very simple. And if you equate this with shopping, you're way ahead of other traders who think this is somehow an indicator thing. It's not. So if the sellers are here and you'll see the buyers are here, this micro high volume is my retail price. Now I'm going to talk in multiple time frames as you think of it, and this is mean reversion. Now the thing to understand, I've always said in TraderLab, and until I stop doing TraderLab, I'm going to always say to developing traders, the market is continually reverting to the mean. Now the mean is another term to use for high volume or retail pricing. And the thing is, it happens in all time frames, or auctions if you want to call it. This little thing up here is an auction. Sellers are here, buyers are right there. There they are. And there's your support. You see where the sellers take control? So what I know then is when I break this volume, which is there, in hindsight, it's now resistance. If I break low, this is a trigger, and I can't get back above here, and there's my resistance, and I can't get back above here, I can exit if it's my plan, okay? Now, if I come back here, this is the retail price. Let's come back here. What do I know? I got stops here. And why would I know this? Let's look at this. Now, when I say I know, I got to be more accurate about this. I suspect. Here's why. Sellers were here. The buyers took control. This is a trigger, actually, for potentially, if this is your trade, for a continuation long, if you're in TraderLab. And there's the entry. Stop will go under here. So I have my entry, break high, I come down. Where's my support? Look over here, there, and the ETH high and this outside edge. So I have a confluence of this, this, this. Okay, is everybody with me? This is structured. Now, it might not be your trade. I'm not saying it should be, but I want you to read a language, because this is all really trading is interpreting. So if you can understand market mechanics, you understand why the market rotates. It rotates because if we run out of buyers or we get our sellers, the current longs in the market might get, might get taken out. And what do I know? I know I got their stops right under here and here and here. So that's what I know. If it comes outside, I'm going to be looking for continuation longs, notwithstanding it can come out under the open, the opening swing low, and I take a stop. Oh my, how terrible. So exit back to the fair price. So here's what we did. We found too high, and this is an auction. Let's look at it from the other side. Too low. See how it behaves? Now, if I go down in time frame, as you think of it, break, too high, opposite. And we're now in this quote time frame, using the term loosely, this is too high. In the next higher time frame or developing time frame, this is the fair price. So this becomes unfair. Same process. This is reversion. Then if this is too high, I'm not paying that. I come back to the fair price in the next higher time frame, which is developing time frame. If this now is the fair price, then where's my stops and where would it be unfair? Outside somewhere. And this is part of the thrill. So I have my mid, I have my VWAP, and I have an outside edge. My outside edge right here has 48 contracts, and that's because of the urgency that took place. Now I'm going to point something out. Look at this. So the sellers were here, the buyers are aggressive and in control. I'm just going to draw a little box here, just something to think about. Now look where the alignment is. I can't draw this all the way out, but I'm going to show you some alignment. So the outside edge is this. Now if I come outside somewhere, and this is part of the issue with mean reversion, or the challenge is where's outside. That's why I call it, well, I always say it's mean. But what I know is I got support here, and if I get liquidity coming back, that means these buyers, I should say these sellers, may want to cover on a retracement. That's possible. I don't know. Let's see. So this is called mean reversion. And what's hard about mean reversion is where's the outside, you see. Let me extend this. Now there's no precision in trading, so those of you who are accountants, engineers, rocket scientists, you're going to be challenged because psychologically the reason you're in those professions is because of somewhat precision. So anything, if you're a programmer or any of this kind of stuff, mentally you're already inclined to a precise operating in precision and accuracy. There is none of that in here. There's momentum and there's slop. So what I know is areas of potential behavior, not what will happen, not where it'll happen, but I do know what happened. I do know now this. I have my buyers here. Now I look at this. I don't think this is a good structure because there's going to be stops under here. So when I come out here, I'm looking in this area and I want it to pick. That's what I want. Now what I want and what I get, but I'm also at a location, so I have this conflict. Now the trade for me out here in a trend with a gap, and who knows, is longs only, long to here, then back to here, and then 45 is my next target. So now whether I get long or not, that's a whole different issue. Watch. This is my next target. So what do we know? We know we have stops under here, stops. So stops are all along here, okay? We're going for 45. So we're going for this. See the liquidity? So that's the trade. Now here, let's come back and look at this. These are just ideas, guys. Trading is not mechanical. It is just you kind of figure out how you identify behavior. And then you know what you'll do when something happens because you don't know what'll happen. When, where. So what I know is this is resistance. If I get above it, it can become support. Here it is again. So right here, this is where I want it to hold. If I'm going to hold for my long. I have a sweep. So this suggests the possibility of a counter rotation. I already know that. I don't know if it's going to hold here, continue, or whatever. So that's part of the thrill. So let's watch. Once I get here and I'm under here and I've got this, I've got resistance. So support, resistance, resistance. Sellers are here, sellers are there. Still no clue. If I hold this, why am I not going up there? All right. Sweep, watch. So where are my stops? Here. Where's my buyers? Here. Look what comes in the book. Liquidity. So right here. Now this one is very hard. It's hard because it runs away. So, but let me show you. I'm going to show you the trigger if I can get to it. So we have location. We're looking for continuation longs. We got our mid. Who knew? And I don't trade the mid specifically. This doesn't matter. I trade the auction. If it happens to align, that's a wonderful thing. But so I have my sweep right here, the sweep in the intersection with the liquidity and the stops at the mid, mechanical traders, and we can get continuation traders. It's not a problem. If I get long, this is my resistance. And remember why I'm still getting long. I'm in a gap and I got 45. And it's there, so I can see it. Too low, resistance, pull back, If this is too low, this is support. It's here. My stop would be here. If I get long anywhere, I'm putting my stop here under this, and these are really similar, okay? So what it's telling me is I got buyers here. And if I extend this thing out, and it's all coming out of there, let's just see the alignment. So what I do, because I kind of forget where stuff is, and it scrolls off the screen, I basically just put boxes around areas of elements of behavior in case I come back. So when I'm coming here, this is support. I get the sweep, I get the trigger. Now, what do I do with this thing? How do I get into this? Well, here's what I know. I know I got my buyers. Okay, so I got buyers. My sellers were here, and I get the trigger. So now I can't get into this, most likely, all right? And that's resistance. So where's my price? Well, this is my retail price in the developing daily time frame. But let's go down to the next subatomic level here. Where's my reversion in this time frame? So what do I know here? I'm going to isolate this for you, and I want you to see the auction in different time frames. Again, I would say as you think of it, because I've gotten out of the habit of thinking of time, so I don't talk about it. So this is where the sellers were. The buyers took control. This is my support. This is support because this is the retail price in the developing daily time frame. In this structure here, this is the retail price. My sellers were here. My buyers took control. The idea is if I come back here, and my risk is out here, I can get long in my trade plan. There's my 45. So subject to your plan, you may not have a trade here. This is my support, and there's what creates it. This too high, too low, retail, mini mark, break high. This is now potentially too low, and I know I got my buyers. I'm just letting you see. If I pull here, up to me, I can buy it here, going for there. And by the way, this and the behavior, I'm talking behavior, and this high volume, that high volume is the same as this. They're the same in different time frames. So if I understand market mechanics, I know that if this is too low and I come across, and don't forget what was too high, it's right there, see it? What am I doing? Good question. Outside, what was too high? There, here, there. If I get long, where am I trying to go? There. Or I get long, where am I trying to go? The sellers dropped it here. The sellers are here, the buyers are here. That's a trigger. Now I'm in micro. It's not a short. It's just behavior. But what does it tell me? This is what's important. It tells me I got sellers here, and there they are. Well, this tells me I got buyers here. There they are. The trend is up. What do I want to do? Get long. This would be nice. This would be nice. Wherever, But what do I know? That's resistance. Why? My sellers were there. If I get long here, I got to get past this. Look at the reaction. You see where it happens? Right at the high volume. So let's watch. Buyers are here, buyers are here, buyers are here. And where are the sellers? There. High volume. So I'm combining order flow, delta, absorption, and the profile to see where, because what we're looking at is the auction in all time frames. So why did the market rotate down? Because any buyers over here at this time were absorbed, and there's the icebergs. If the sellers take control here, I got to look at the other side and say, well, where were my buyers? Well, I got my sellers, I got my buyers, and I got my buyers. What's a trend? Up. What do I want to do? I want to get long. What's the problem? There. So I got support, I got support, I got resistance, I got resistance. If I break high, is it possible that resistance becomes support? Right there? I know I'm drilling in here maybe too much for you guys, but I want you to see it's not that you trade this. It's that you learn to read it and anticipate it. We have to be ahead of the market, not chasing the market with FOMO. We have to be intentional. We need to know what might happen. We certainly don't know what will happen, so take that card off the table. Then it's where might the market go and why? Why might we hit here? Why might we go there? Why is this resistance? Why might this be support? And why is that support? You need to be able to answer that. Why might we go here? Same reason we went there. Same reason we tested this. Same reason that's resistance. And this is higher time frame. It's all the same. Now, right here, I get the next target. That's why it's a target. And there's more. Where do we test? Here. So we get the sweep. If I don't go up, and this is now resistance, by the way, I got to mark this, right? You see what I'm doing? I'm following process. That's as deep as this gets. I don't know what's going to happen. Why would I even take the time to be concerned about that? I can't. It's a waste of time and energy. What is this thing about needing to be right? Waste of time and energy. Put your energy into anticipating behavior and already being ahead of the market. Not knowing what will happen, just being prepared. So I know this is resistance. If I break above it, this area, now if I come under here and I get a sweep, I break high, I hold, this is an aggressive long. I would not take a long here. This is important. This is actually a scale or an exit for me. That's as deep as this gets. So that would be like a long from out here to there to there. Trade could be done. Trade chunks. Or you're trading a higher time frame. So this is why I have to give you all the ors, because the rotations you operate in are plan specific. As a day trader, I'm trading rotations primarily, in alignment. Now let's look here. My buyers were here. This is my retail price. I get my buyers here. Where's my resistance? There. And where else, Tom? There. Wouldn't I, if I understand, if I'm below this, is it reasonable to scale here? I'm asking you. What do you think? Now what? Well, now, where's my support? Well, it's here. Here, now this is interesting. This is very important what's going to happen right here. Let's look at it. Yeah, I remember this. I was looking at this going, this is very tough right here. Because here's what I know. Let's talk about what we know. Well, we know this is resistance now. All right, that's nice. And I've got this coming back in, and I have this. I got to be conscious versus unconscious. Let's just draw this out. We're going to use it if we come back. Now, the next thing is I have in my plan, and I posted this in TradeLab. It's not saying it's any good or anything. There's not good, bad. It's just edge. So, what happens on any one trade is just, random. Remember, gaming. So what I know is this is the first hour's low, and I have a 98% probability of taking out either the first hour's high or low. No, Ragnar, I'm not referring to CVD. I don't use CVD. It's a lagging thing for me. I look at this, the individual delta, because this shows me market orders, which are buy stops. You see them coming out. And if it doesn't go up, and there's my iceberg, they're on the other side of the stops. They need the liquidity. So the stops, are useful for them. And on the opposite side, I have sell stops coming out. Then I get icebergs buying. So, they're going to be operating in their own time frame, doing their thing. We're not trading against them. We're like minnows swimming with the sharks. So this is too high. Variable high volume node. Watch. I'm going to show you now what I call a migration trade. I made these things up. Who knows? You know, I made them up for myself many, many years ago, and only through, what do you say, a lot of pain, because but I found a way to stay as close to the market as I possibly can. And of course, I don't know anything. I know this is support, and I also know this has about an 80% probability. So I am concerned that I will get under here, and if I do take out the opening swing low and I find absorption, and all I did was pick off stops, I'm already looking for a long here. So in my trade plan, this is a long if I come out here. Depending what time it does it. If it does it much later in the day, might be a different issue. So here is a trigger. Now, when I see this, and I was looking at this, you know, I'm thinking to myself, well, I got this IB stat, and I'm getting a little twitchy about it because I know I can come under here and, you know, do anything. And I have an 87% probability to take out either the previous day's high or low. At the moment, I'm thinking maybe we might fill the gap, right? So, or half gap is was posted to Trader Lab this morning. Doug posted that. Thanks, Doug, for putting that in there. So we have to be aware of the gap, and we also have to be willing to take a stop, right? Not willing to take a stop, you can't trade. That's that. So anytime you go, I don't want to lose, you're already out. You've already taken yourself out. You might as well take the stop, because that you are better off taking a stop because you now follow the plan versus disrupting the plan. Now let's say right here you don't have an edge because your next trade is out here. Then guess what? You don't have a trade. That's the reality. Now this is a trigger, but if you need this, you got nothing going on. And this is really your support. For me, if it came under here and then came back above, I'd be all over it. So this is subject to your plan, whether or not this is an entry. Let's watch. Is there any reason here that you wouldn't suspect that we're not going to test this liquidity? And look where we come. VHVN. What is a VHVN? Now, I have no clue. You know, I'm clueless, right? Here's what I know. This is where I want to get long with the liquidity. So I have my liquidity here. This is my outside edge. No clue. Still looking at this. I'm back under here. Look at this aggressive selling. Looks like the end of the world. Watch. So here's my liquidity. Here's my location. Here's my variable high volume node. Now I got one here, I got under it. So if I'm under it, then I'm looking at this one. And I'm back to the opening swing low, breakfast ready to be on the desk. Buyers are here, and here, no clue. Watch. Now what? Let me take you back here. I'll show you. Now, hopefully I can get into real time. That would be nice. So absorption, and again this, right? So I have a confluence. I also have conflict. There's absorption. Sellers are here. Buyers are here and here, maybe. There's the absorption. Here's micro high volume developing. This is the same as that, the same as that, and the same as wherever it went, that 45 up there. So I come down, location, no clue. Let's look at a trigger. Volume is in here. So it's sellers, buyers, clueless. I'm seeing buyers and I'm seeing sellers. This is a consolidation, right? This is what an auction is, and it looks like this. I'm not paying that. Yeah, but it's on sale and excess. No clue. Okay. Uh, if it breaks high, this now is my retail price. So if you get long, this is a trigger. This is where it fails. Or break high, this is support out here and here. Either one, up to you, you know, whatever you want to do, it's your thing. Whatever happens, happens. Remember, if you get long, this is where the stop needs to go. Now, the other part of that is, suppose this doesn't, this is not your trade. Then you have nothing to do. You just hang out, get in your Barca lounger. Next trade, let me show you. Now this is called the variable high volume node. Let me mark it. This is interesting, and I use these for trades, as you guys know. And by the way, there's 60 PDFs of structured trades that I've shared, and they're just screenshots. You know, I never intended to do a stream. Bookmap asked me if I would do it, and you know, initially when I agreed to do it, it's like, yeah, you know, just do a few of these things. So this is support. There's a sweep. This is support. So I got support. I should say it starts out as resistance. It becomes support. It becomes resistance. It is support. I break high. It is support. I break under. I've got this one. I get the stops under here. I pull back here. No way to know. Okay. I break high. Resistance. See how it behaves? I pull back here. Here's what I have now. I have absorption here. I have a sweep. I have a trigger. This is important. And as far as right here, we're going to zero. Until that. Now I have resistance. Now I pull back here. And I'm very much in micro here. If I get involved here, and you know, again, if it doesn't fit, I'm just showing you micro. I'm not giving you trade recommendations. If I get, this is resistance now. If I clear here, this is resistance. If I clear here, I have this up here. And I have resting liquidity, again, that I can work with. Well, oh, okay, IB. This is a structured trade right here in the trader line. Now, the way this would work is you have this and you have this. So I look at these as potential areas to observe. I also know my last location where I had an auction, in other words, where it pauses, is here. So if I'm using reversion, which is my main thing, because that's just the way the market works, it's not up to me. Here's what I know. Here was reversion. If it's too high, you see I can break away from it and come back to where it was too low, which is this one, where the high volume is. And if I find my buyers, there's my buyer, and I break above here, this could be a long if I'm trading this time frame. And it's not a recommendation. It's you have to get the broader stroke before you go down in time frame. But the thing I'm trying to stress here today is the market is doing the same behavior in all time frames. So as you go down in time frame to try to get a sense in as short a time frame as you can of the condition, when you see this, you can interpret it. Doesn't mean it's a trade for you, but this tells me when I see this and I see my buyer that this is currently, remember that, currently too low. When I come up here, I have my sellers. There's the liquidity. They are there. There's the iceberg. That's your seller. The buyer there was absorbed. Thanks for playing. And I have my buyers over here. And my micro high volume is there. So in this structure, this is the mean. This is the fair price. If it becomes unfair, I leave it. If I leave it and I come back to it, here or here, I can look for a continuation trade and take a stop with everybody else. See? Does this make sense? Yes, no, maybe, who knows? I don't know. Does that make sense, everybody? How are we doing in YouTube? Mariano, do I think the Hunt brothers are moving silver? I think those guys have gone to the happy hunting ground. When I first started in the market in trading in 1980, I was there for the Hunt. When they squeezed the silver market, it went to $50 an ounce, and the gold went to $750. It was unbelievable. Then the exchange, because now the rumor is, I'm just going to say, they changed the rules at the exchange to liquidation only for silver and gold. And the thought was that the exchange, the head of the exchange, the guys who ran it, the board, were stuck and getting squeezed. So the Hunt brothers cornered the gold and silver market. And then it was liquidation only, so then it went limit down. No, limit. And I'm going to say fortunes were lost. So that's how I started in the market, jaw on the ground. 1980. So this sets up your long. So you have a sweep, location, continuation. All up to you, or these are not qualified. Next location is here and then this. And there's more. Here. So this is the next area, here and here. Okay, so that's where we're trying to go, not a recommendation. I was going to tell you about the IB continuation trade. At 9:30, here is the first hour's high. And if you remember the statistics, there's approximately 98% probability we take out the first hour's high or low, and about a 29%-ish probability to take out both first hour's high and low. Well, I thought we might have a shot at the first, at the opening swing low, but so far not so much. And it doesn't mean it won't happen later in the day. Anything can happen. So nothing ever is off the table. So the IB continuation trade is this: break high, support, sweep. This is a long. Stop goes under here. This sets up a long, and you got to scale. You're scaling here, and this is plenty of room for the scale. And this is a structured trade. You would learn this in Trader Lab. Now, I'm going to dig a little deeper into it for you. Let me do a little. Why would you be saying, Kellerton, caution longs? I think you're kind of looking at this from the wrong angle. I really do. You seem to be fixated on the counter rotation versus alignment. Over time, that's not a good recipe, in my opinion. But, you're responsible for your outcome. That's okay. And as long as you have an edge, and this is going to create consistency and sustainability, then you do your thing. It's not for me. I don't know what your edge is. I do know I would not be taking shorts. And I think I have a little more understanding of this than you do, because I've done that. I did it for years. I just trade both sides. And what I have found is under certain conditions, I will not trade the other side. The conditions are not equal. That's something you need to think about. That's from me to you. Long to here. IB continuation. Long, long, long. If you get taken out, I put it back on again. This is my outside edge. It's from here. Sweep, If I get a sweep, I'm going to be risk neutral. If I get taken out, I just put the trade back on. I don't care. I can't. What does it do for me caring? And then I'm, just trying to go north. And what are my targets? Again, not recommendations. This is where I'm trying to go. Okay, so I'm just trading towards targets. So am I going to let counter rotations unless it's in my plan? I'm certainly not going to short it. And I'm not going to let my fear do anything other than me following my plan. That's it. But I'm never going to I'm not going to allow emotion and my fear dictate to me. Kittleton, you're asking me, would I belong up here? Absolutely. If you're asking me, I certainly would not be short. The only thing that would get me out of a trade is my trade management plan. And that means either a stop or, a trade management thing. I can't imagine being short. Now, it doesn't mean that we won't go and take out the low of the day. That has nothing to do with it. Until it changes, it hasn't. So liquidity, would I belong? Yeah, I trade into liquidity. But what's more important? Let's try to prioritize this. What is more important? It's this. So in a short-term rotational basis, I'm going to use all of this stuff because I'm operating in a short time frame. But I'm going to continually take long continuation trades because getting short, in my mind, and this is not a criticism of counter trend traders, does not have an edge. It has a diminished edge. Now, in a different market context, I'll take long shorts. I'll spin like a top because I know where my edge is. But in this context, is my edge the same taking shorts as in other conditions? If you treat this mechanically without prioritizing context, you are doing, let's just say, edge is edge. And you got to understand edge. And you have more work to do, because if you're thinking shorts, or every time you see liquidity, you're thinking that's the top, that's not trading. That's fear. You have to understand fear. And the fear is rationalizing why you don't do something as much as anything else. Does that make sense, everybody? If you guys are listening in YouTube, what do you guys think? Give a like if you're getting something out of this. This is the business of trading. It's not pretty. It's simple, but random. There's nothing else you can do, in my opinion. Now, when I mean nothing else, if you want to get into the market in the purest, least conflicted way, at least that I have found, and I built systems, I tried everything to overcome emotions and create more certainty. So I spent years, not months, many years doing things because I managed money. So I was a trend follower, different than this. But the mechanics of the market are the same. It's the rotations. So higher time frame, lower time frame, it's a rotational business. Why does it go down? There's stops here. Come on. What's under here? Stops. If I come down and take the stops and there's absorption, sweep, what am I going to do? Well, if my plan says do it, I'm getting long. Where am I going? Well, here. How am I going to get there? No clue. Is it my job to know? Can't. So what do? Manage. Get risk neutral, job number one. Minimum 2-lot configuration. Job of the first contract is to buy the stop on the second one. And then hang out. And work on my crochet. Follow my plan. Manage my trades in my time frame. And that's it. It's nothing more to it than that. Now, imagine if, now let's just think about this. Imagine, no, I'm not kiloton. I'm going 63, 64. This is my outside edge. And this is a low volume area. 60, notice where it is. Target. Now, there's a little something up here, but this is right now where my liquidity is. And that's a single, that's a target. And that's a market profile term. Let me see if I can get this thing over here. One moment. Let me just. So this is today, and I'm trying to get up here. That's high volume in a higher time frame. Now, everybody slices these things differently, so I'm not going to get into the conversation about right, wrong. There is no right, wrong. It's what do you relate to, what speaks to you. Remember, foreign language. So I look in multiple time frames. I know this is an outside edge, 71.5-ish, so I can come around here. I also know whoops, hold on. I have this single at 60. Where'd this thing come from now? I'm thinking, well, wait a minute. Is this stale? 63. I think that's a bad, yeah, this is stale. So this is out. Sorry about that, guys. So this is where I'm looking next, single, okay? Yeah. Well, 64, yes. 60, 64, and up at 72. And none of them are trade recommendations. They're auction-based levels. And remember, yesterday in the stream, we were talking about these were targets coming up from down below. So the thing about the market is, it doesn't have to do anything. It's not on a schedule. It just sort of does its thing. And why? And the thing that can happen when you're in these higher time frame, when we're trading as day traders, we're trading inside higher time frames. This chop is balance, two-sided trade. Whoever is wrong, and don't forget, we think we might be in a bull market. Has that changed? No. Where's the fuel? What about the shorts in here? So the shorts in here, and of course the longs got taken out, take the weak side out, and then what? Abuse the other side. Now what's going to happen in here is at some point, don't know when, not our job, we're going to get too long. And then we can come back and take out the longs in a counter rotation in all time frames. And then once we get the weak longs, assuming we don't do the Acapulco cliff dive, then it's going to be continuation longs. These guys now are under the bus or getting squeezed. Where's the stops above here? Here. And where else? Here, 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 all-time high. If we get up in here, it's going to be, as they say, coyote ugly for the shorts. But in the meantime, we're here. So 63, 71, who knows? And there it is, the 71 and the 63-ish. That's it. And this. So that's my trades. I'm sticking to it, and whatever happens, happens. That's as deep as this is, guys. Yeah, Kelleton, you're getting too myopic. Remember what this is, what we're doing. Think, we all talk multiple time frames, right? What is this? What is multiple time frames? It's a vertical integration of behavior. So the higher time frame trend, depending how you look at it, might be up. So why were we taking shorts yesterday morning and then longs? Because we're trading rotations. Then as we go down in time frame, as you think, I'm going to try to stop saying as you think of it, but that is how you guys think. These are the rotations. So it's all the same. It's inside of each other. Think of Matryoshka dolls. I always like to think of it as a Matryoshka doll. You know what a Matryoshka doll is? It's those Russian dolls, they fit inside each other. Well, you can have the real little one down to as small as you want to go. This is micro high volume. This is an auction right here. If this becomes too high, I can rotate. If it's not, and I push off, I continue higher. That's all I know. I have liquidity, which are sellers, and I have a sweep. This suggests a counter rotation. Doesn't have to, never has to, who knows. Let's watch. Let's just keep an eye. Let's watch the auction in micro. Where is it, Tom? Is it a short, Killaton? No. Well, maybe for you. Me, not so much. All I would do in this context is take long continuation trades. Go to targets for risk management, throw my stop under here, and then deploy my trade management process, whatever that might be. Everybody has to come up with their own, and it's a statistical process, not this one trade. I know this might be too high. This is like, it's not a pivot per se, but it is an auction location. I know my sweep, sellers, this is resistance. If I get above it, I can continue. That's what I know. If I can't clear and I break below it, it's like a pivot of sorts, okay? And it's right there. If I get above it, then I continue. If I can't get above it, it's resistance. That's as deep as this is. What's it going to do? Guess what? Haven't figured that part out yet. So let's not try to. Let's try to align and not be in the be right and prediction business. If you're going to do that, you ever see these little storefronts that have fortune tellers in them? Open a store. Be a fortune teller. It'll be more profitable than predicting anything here, my opinion. And I can't say that fortune telling store is a good business opportunity, but if you're doing it here, that's what you're doing. And you're also potentially putting yourself out of business. So you have to decide. There were some great posts in TraderLab this morning about market profiles, about determining statistical edge, about understanding your mind. Very good book on that one. Trading is the ultimate psychological challenge. Our mind's biology and genes are not naturally suited for the mental demands of trading. In fact, they actively work against us. The conventional wisdom of eliminating emotions from trading is not only impossible, it's wrong. Emotions are essential for sound decision making. The real problem is not emotions themselves, but our struggle to control and suppress them, which diverts attention from our trades and locks us into erratic patterns. Is that you? You got to understand it. That's why I anticipate FOMO, because I understand that's my wiring. And because I've responded to FOMO so many times over the years, and anything else you've done, I've done, and unfortunately did it longer. You trade 47 years, and back when I started, there was no information too. So I'm just saying, all you had was a book. There were no PCs. There was no internet. You went to a seminar, and even then they were a ridiculous amount of money. And I can tell you, the books were all great, and very few of them did anything for me. Because you take what's in a book and you think somehow that's what you should do because somebody wrote it. How's that working out for you with the influencers, the posters, the quote, paid chat rooms? You've been doing it a long time. And I know the rationalization. Well, unless I got something out of it. Maybe what you got is wasted time and wasted resources. I don't know. You know. What I had to do, and I spent a lot of time with systems. So, because I was managing money across asset classes, trend following, so it was position trading. So I spent a lot of time with that, and I learned a lot from it. What I also learned ultimately was that I was always chasing the market in the sense of optimizations, because I was optimizing, and basically that's a curve fit. And when you guys look at trades, using your indicators, and then you do a little tune and tweak. We used to have carburetors in cars. You get your screwdriver out so it runs a little smooth before fuel injection. You guys probably get the same thing with your snow blower or your lawnmower. It's got a little screw for a carburetor. Tuning. Well, what do you do with indicators? because they're random, you're always going to tune them. Well, that's just curve fitting. What's happening here is the ultimate truth, not a backwards looking math-based derivative of a moving average, most likely, or some other component that is looking back. We got to be right here. And using order flow puts us right here. And then the auction lets us read the interpretation of the participants. That's what allows us to participate potentially here. If it's your trade, I'm not saying it is. But I already know what's here. I know what's here. What is here? My buyers are here. What was here? My buyers are there. What's here? My buyers. Now, here's the fallacy of risk aversion, which we all have. I don't want to give it back. Does that run through your head? Listen very carefully. I don't want to give it back. Fear. Let me ask you a question. Does the fear of giving it back, which means you put your stop there or there, does that help you, or is that a problem? What do you think? Where should your stop go? Where you give the least back and you micromanage, or where you take yourself out of the trade if it hasn't failed? If it hasn't failed, why would you put your stop with everybody else here? I don't. Why? Because that's what everybody else does. Retail trader behavior. Write this down. Think like a retail trader. Don't act like one. Anytime you have the impulse, listen carefully, the emotional stimulus to avoid risk, and this is risk of giving it back, you're going to behave in response to that emotion, the fear. But that doesn't belong here. It's what takes you out of the business and limits your opportunity, in my opinion. So anyway, IB continuation trades, right? Long. This is all longs. Where are we trying to go? Yeah. Right? How hard is this? Oh yeah, change the carb jets. Is this making sense, guys? Oh no. Doug, don't be like Furs. We have is that your new car, Doug? Is that your newbie? Furs, we have a fellow named Furs in the Trader Lab, and he's a lot of fun. He vacuums and trades, which is I find interesting, or drives. And he has his Bookmap open. Oh my goodness. Trader Lab is a rather interesting community of like-minded traders. I hope you guys are getting from this. If you're in YouTube, if you're interested in the Trader Lab and the process I share here every day in the stream, come to the Trader Lab. If I draw a rectangle, no, it's just a box. No, when I'm talking about indicators, I'm talking about, stochastics, RSIs, Bollinger Bands, all the canned stuff that's in your the standard canned stuff that's in your trader toolbox. Guys, you look at your higher time frame toolbox. This is something that I think the light bulb might go off. You open the thing up and maybe there's 100, 200 indicators in there. So think about this. If you have 200 indicators, why? And if you have 200 indicators, don't you think they all work randomly? Yes. Well, do you think they have an edge? I'm going to give you this one. Probably not. So more indicators, more randomness. Does that solve the issue? No, it's maybe the problem. Please give a like. Hope you got something out of this. Use the link in the bottom of YouTube if you want to visit the Trader Lab community. It's a group of like-minded traders who've come together to leverage their collective experience. It doesn't matter how long you've been trading, what you do, how you do it. The objective of Trader Lab and the reason I do it is to help traders benefit from my experience and also yours. We all walk in the same shoes. The thing is, if you keep waking up in the same place, Trader Groundhog Day, you might want to do something different if you're interested in the business of trading and potentially creating sustainability, a career path. Use that link in the bottom of YouTube. Leave a like on the way out. This is our last longs, and remember, and these are not trade recommendations. Thanks again for visiting Trader Lab. Don't forget to like. Come to the Trader Lab community. There's a library of webinars, a document section, and so much more. Thanks again, guys. Look forward to seeing you soon. Appreciate you guys in YouTube visiting the Trader Lab. Have a great day. Follow your plans, and if you don't have one, visit the Trader Lab. It might be a great place to visit on your journey.